Well, hello folks. Let's continue our candlestick pattern series. Joe with you here. Let's get into the bullish engulfing pattern. We are going to break down the probabilities and how we can use it successfully. So let's jump directly into it. Pattern statistics. We're going to go to Thomas Bulkowski once again. If you guys want to jump on board and investigate it yourself, there's top left. You can see his website. It's actually really cool. What does he do? Well, what he does is he gets 103 different patterns and he compares them to each other, ranks them, and gives the best scenarios on when to use these patterns. So, frequency rank for the bullish engulfing pattern, 12th out of the 103 patterns that are studied by Bulkowski, but the overall performance rank is on the low side, 84 out of 103. Most of the time, folks, with high frequency patterns, they do give a lot of false moves. But what I love about when we nerd out on this, let's talk about when it's best to use this pattern. So the best percentage meeting price target is 67%. Now what that is you take the pattern's length, add it to the top of it. That's going to be a quote-unquote target, or you can take it and put it on the bottom of it for your bearish trades, and that is actually going to be a target as well. So this will hit its price target 67% of the time. So that's really good. The problem is with the overall performance rank 84, there's specific times that we got to use this. And take a look at what's in parentheses below that best percentage meeting price. Bear market in a down breakout. But this is a bullish engulfing pattern, you might say. Well, it looks to me that this is a better signal of temporary bottoms or even counter trend trades. Best average move in 10 days, 6.31%. Over 6% gain in 10 days. That's very impressive. However, the situation that it does do this in, there it is, bear market, down breakout. I'm starting to see a pattern in this pattern. How about you guys? So the best 10-day performance rank is 14. That's high. And the reason being is because it can reach its target 67% of the time. It's got a high percentage return in that down market scenario of 6%. So it gives it a pretty good rank there, 14 out of 103. But there it is, in a bear market down breakout. Now, folks, you're going to see these, and you have seen these as I go through the series of the scenario best to use each pattern. That's right. There's 100 trades done with each pattern in up markets, sideways markets, and down markets. That's why you're seeing these things in parentheses. So let's break down or take a visual of what we're kind of looking for. 3 bearish candles to the downside. I could go more than that, maybe 4, maybe 5. What I want to see is an extension of a down move in an already downtrending chart. The reversal candle is going to be engulfing the previous candle, and make sure you got 2 contradicting colors. I'm doing red and green. That's kind of my favorite. The majority of charts out there have that. Some are white and black. I've seen yellow and blue for heck's sakes. Don't ask me which is which. But we need the reversal candle body to completely envelop or cover the previous day's body. Now, you can get away with highs and lows. That's fine. Then we need to get that confirmation candle to the upside where that body needs to exceed the high point, the high body point of the reversal candle itself. So the overall engulfing pattern is these 2 candles here. The confirmation is going to be once that engulfing candle's body, upper body, is penetrated. That's going to be your confirmation candle. One thing I'll make note of too, once we get the engulfing pattern, the confirmation needs to happen. So if we don't get the confirmation immediately, you can kind of throw this pattern out. I'll show you an example coming up. So the best setup conditions, downtrending chart. That's kind of weird, right? Because it is a bullish pattern. Well, it's going to be counter trend after a bearish move lower. So not consolidating, not bouncing, but extending its move to the downside. I had the 3 candles there. 4, 5 might be better. Just an extended move to the downside and then getting that bullish engulfing pattern would be ideal. Confirming above the engulfing candle's body, right? We need the confirmation, and we need that confirmation quickly. The next day would be ideal. Shorter term, I'm going to call it shorter term because it is best as a counter trend trade. We took a look at Bulkowski's percentages, and that's where this thing performs the best. If we're going to get that pattern rank at 14, it's going to be in a counter trend scenario after an extension of the bear side. Now I've got an example that actually has a couple of these because this is, the frequency of this is 12th out of 103, so it's going to be easy to see these. They should happen often. So here's my chart. Let's get it going here. And you can see that I don't really have a downtrend. This is more of a sideways trend, but I do have a bear move coming. That's right, folks. I pre-did this before this class, so I know it's going to happen. There we go. So I've got a bearish move, and I've got, well, we can count the days. 1, 2, 3, 4, 5, 6 days down with the confirmation, or excuse me, not confirmation, but with the bullish engulfing pattern in place. You guys can see the big green candle enveloping the previous day's red. Okay. That's something. So the next thing I need to see is confirmation to the upside, and I didn't get it. Now immediately, based on the percentages that I just broke down, I'm just going to throw this out. Let's see what happens if we cap it. You can see a couple days later, it did exceed the engulfing candle's body's high, but let's see what happens as we keep going further. Well, not much. Looks like it's rolling back over. So I think it's super important that we wait for that confirmation of the engulfing candle. It needs to trade the next day. And in this case, it really wasn't downtrending. What I like, though, is what I'm seeing here. Let me click a few more. We are setting lower high, and we just broke a support level. So in the first scenario, we weren't quite in a downtrend. We were more of a sideways. Now we have established a downtrend. We got a lower high, and we just broke a support level. So this would be an ideal area for me to see a bullish engulfing pattern develop. And it does take a little bit, folks. Let me just hurry down to where I know one occurs. It's coming up. And it's kind of a weak one, but it is at a certain lower area. There we go. So you can see that we have kind of a dragonfly doji here, but we are at a low extended point of this overall trend, and we do have a body that technically engulfs the previous day's body. Now I'll give you this. Yesterday's body was not red, although it is a down day because it closed well below the previous day's low. So I'm going to kind of give a little bit of a hybrid on this just to see what happens. So the next day, it does confirm, didn't it? It confirmed with a pretty good move to the upside. And let's see how far this guy takes us. All right, pretty high there. It looks like, okay, now we're rolling back down. So overall, folks, it's been a pretty interesting move because it did counter, it did bounce, and it looks like it's rolling over. Take a look. We did set yet another lower high in the overall trend. One thing I would like to take a look at, let's take a look at this candle because let's see if this thing did a 6% move. It's at $106, we'll call it, respectively, right around there. 6% of that would be, what, 112? So get about 112. Yeah, it easily made that. In fact, it went a little bit further up than that, didn't it, after its confirmation. So that's kind of a successful one, but let's do something a little bit more realistic to the pattern. That was kind of made up. Wow, check this out, guys. We rolled right back over, continuing that bear trend. Let's see where we go from here. Aha, there's one. That's nice. So now another bear move. A little bit of a sideways pattern as this confirmed, but you guys could see that that body is well outside of the previous body, or I should say the previous days inside today's body. It is definitely being engulfed. Up, confirmation to the upside with a little bit of a gap. And let's see where this ends up taking us. Pretty good. Okay. It took us up a little bit. Let's see the percentages on this. About the same, 106. About 6% of that's going to put us at what? 112. And yeah, we exceeded that as well. Okay, so let me just click a little bit forward and see where this kind of ends out. Yeah, it just kind of runs itself out. But 3 scenarios. We got 1, 2, and 3. And you guys can see the first one, we didn't really have a downtrend. We never really confirmed, and so it didn't go anywhere. The second one, I know I reached, but hey, it was technically inside of the next day's candle range. It was definitely a bullish engulfing, not the prettiest, and it did move higher after it confirmed. And the third one, also a little bit more cut and dry, got the inside day, the full envelope, it's obvious to see, and it also did its confirmation and reached its target. So, not bad. 2 out of 3, that ain't bad, right guys? So let's do ourselves a little bit of a review here and talk about what best scenario to use this in. So the pattern happens frequently. It's 12th. We saw 3. That chart. I just clicked a few days and we saw 3 of them. two are specifically, yeah, two are real. We reached on the third one, that's fine, or the second one, I should say. But the pattern ranks high in performance, and we just saw that out of those three examples, two of them worked. Best performance is in a downtrend after a down move. The first example we had wasn't quite in a downtrend, more of a sideways. Never really confirmed either, did it? It didn't confirm, didn't go anywhere. High performance in the counter trend scenarios. That is obvious. Even though they were short-lived, they did hit their area pretty quickly. So it's kind of interesting. This is a great class for me personally. I've been trading for 20 years, folks, and I never really thought of the bullish engulfing candle as being best in a down market and downtrending, right? Interesting. All right, folks, I'm looking forward to our next class and our next pattern. It's going to be fun. Thank you so much for joining me. We'll talk to you next time. Bye, everyone.